Welcome back. You're tuned into the IPO. Central and third-party logistic player Shadowfax that is about to hit the D Street plans an IPO worth 1,907 crore rupees. The IPO is all set to open on the 20th of January and it will close on the 22nd of January. We caught up with the management of the company to understand their fund utilization and growth plans going ahead. Let's listen into this slice of that conversation.
We are the largest new age third-party logistics company in this country today. We service anything and everything which is getting delivered to our doorstep. So be it e-commerce, be it quick commerce, be it food delivery, any platform that you can order from, Shadowfax essentially delivers to customers' doorstep. We are probably one of its kind sort of a model where we have built a very robust technology and process which spans across more than 2,500 cities of the country, where we are delivering to customers' doorstep. And you think about any category ranging from 10-minute delivery to a same-day delivery to intercity delivery, we specialize in that. Our model today comprises of a massive, what we call as a hybrid mesh network, where essentially we have last-mile facilities, close to about 4,300 last-mile and first-mile facilities that we have, where basically parcels reach, delivery partners come, pick it up, and deliver to the end customer. We call our model as a right asset model, okay? We have taken very judicious call in ensuring that some of these facilities that we set up, the sortation centers, we invest our own assets, we invest our own technology into that, while ensuring that all the trucking ecosystem, all the last mile ecosystem is crowdsourced and an asset-light sort of a manner. With this, we have proven an extremely capital efficient model to ensure that as we scale, we stay profitable. Over the last couple of years, we have been growing at about 32.5% CAGR basis. We have been profitable for 10 back-to-back quarters now. And this year in the H1, we have recorded a growth of close to about 68% year on year while expanding our profitability. Our core USP, our competitive advantage, what we call is how we execute last mile. In any digital transaction, close to 50% of your cost is always last mile. We believe through our unique differentiated technology and the way we manage last mile through our crowdsourcing sort of a platform, we believe we have built one of the most efficient last mile technologies in the country today.
How do you, leverage technology to ensure that the last mile cost is much lower? Vaibhav, I mean, you have designed the entire tech part of it. How do you look at it from that point of view? How, why and how is a question which I think the street would be looking at. Why your last mile cost is much lower than the peers or a competition?
So, see, the important part is that we are the largest crowdsourced gig platform that is there in the 3PL ecosystem that is present. And the benefit that we get from working with gig platform workers is that it is the kind of flexibility, it is the kind of cost advantage that we are able to drive in there. So if you look at under the hood of our technology layer, any gig worker on our platform can just onboard within 5 minutes, and that too with proper KYC. We have integrated with Aadhaar APIs to be able to extract all the information of that user and validate the selfie of the user on a real-time basis using our AI engine, so that we are absolutely sure that the right person is there. Now our payouts engine is where we have spent a lot of our energies as well. Now it's an entirely gamified ecosystem which rewards riders basis their efforts. So your payout is dependent on the distance, the density, the demand-supply gap that exists. And on dynamic parameters, we adjust this payout to ensure that riders are rewarded efficiently for their effort. At the same time, as our densities increase, our operating leverage also starts to kick in. So for example, if I am delivering a number of parcels in Dharavi, it requires much more effort for me to deliver. Whereas if I am delivering a number of parcels in a single apartment building, it requires relatively lesser effort. So our dynamic payout engine actually takes advantage of this to give us the operating leverage.
You directly interact with the gig economy. For the last couple of weeks and months, we have those debates going on about 10-minute delivery things. And since you manage last mile delivery not only for e-commerce but also for quick commerce, I just want to ask you, is there really a pressure on gig workers with respect to a deadline of 10 minutes?
That's an interesting question in current times. There is no timer, there are no SLAs, there are no penalties on our platform or what we have seen in our competitor platforms as well. Essentially, 10-minute delivery in this country is enabled through a massive network of dark stores and by bringing inventory closer to the customers. 10-minute delivery is something which customers love, and that's why customers have been ordering from there. But essentially, it is the density of the dark stores which is enabling that delivery and the efficient processes that the consumer companies have set up within their dark stores. Last mile happens fast because the stores and the inventory is very, very close to the customer.
You're raising 1,000 crores in primary.
Yeah.
You're one of the few companies, new age companies, who have raised 1,200 crores in the entire history of the company. Yeah. And of that, you have only utilized around 700 odd crores for capex and technology. Still sitting on 500 crores in cash, and you're raising additional 1,000 crores. Yeah. So why are you raising 1,000 crores?
See, we have a huge belief in the growth opportunity in this country. As per our market report partner, Ritzier, India's e-commerce market as well as the hyper-local market is expected to grow anywhere between 22 to 27% on a CAGR basis over the next 5 years. We want to invest in infrastructure, we want to invest in capacities, automation, enter into newer pin codes where we are not present today, and set up that capacity for the growth. We are building a platform where we believe the growth that we have delivered historically is going to continue as we gain market share over the next few years. Another very, very important aspect that we are today building for is basically ensuring that how do a small seller, how does a small brand come online and basically order or fulfills a transaction through our platform. For that, we are massively investing in sales team, we are building platforms, we are investing in technology to ensure that the growth that we have historically delivered probably will deliver even a faster growth than that over the next couple of years.
How